This is Las Vegas Real Estate Now, where we bring you the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld, along with our co-host, Shelley Brown, and we've been selling homes here in Southern Nevada since 1988. Shelley and I are also very proud to be part of the Real Estate Radio Network. That is a national network of local real estate professionals delivering timely, balanced truths about local market conditions. And with me in studio, I have Kari Phillips from Southern Fidelity Mortgage. Kari, we want to talk a little bit about some changes, some recent changes, some updates.
Fannie Mae, people were doing is when they were upside down, they were saying, yep, I'm going to rent my house out. They gave me a lease, and then they bought another house, and then lo and behold, that lease was no longer valid, and they let that other house go. Mm-hmm. Okay, so it's called a buy and bail.
Right.
So Fannie wanted us to have the client. We needed to prove that client had 25 to 30% equity. Then we could utilize the lease to offset that payment to help clients qualify for the next house. So now they've lifted that rule. You can purchase another home, and you don't have to have any equity or equity at all. You don't have to prove it. You can get a lease agreement, and you can get a renter in your current house and purchase another. They really feel like people aren't going to really buy and bail. There's equity built, and it's not happening as often. But another change that they've done is, when you have conventional financing, you have to have a certain amount of reserves in the bank. Mm-hmm. That means that if you're buying a home, a primary residence, and let's say that new primary residence payment is $1,000. You've got to have $2,000, so 2 months reserves in the account after closing to make sure that you've got enough. If something were to happen right away, you've got enough, a little kitty there. Part of those reserves, people had these stocks, and they were only allowing us to count 60% of the stocks towards the reserve requirement. And now they're allowing us to count 100% of the stocks, bonds, and mutual funds as a reserve requirement.
And some of the other things that I see, there's change in employee business expense. Explain that to me.
If you're a plumber, if you're an electrician, if you are someone that wears a uniform, somebody that travels for your job, meals, entertainment, you can write those things off. The government allows a CPA or you to write those things off. They're called 2106 expenses. What we were doing before is on 2106 expenses, let's say you made $50,000, but you had $20,000 in 2106 expenses or $10,000 in 2106 expenses. What they were making us do is we had to take that $10,000 off of what their actual amount that they could use for qualifying income.
Right.
That would really short people. You got a guy that makes X amount, and oops, he gives me tax returns, and now I say, okay, Mr. Guy, you now don't qualify because what you were allowed to do before and count off your meals and entertainment, we're now hurting you for it, even though we allowed it before. What Fannie Mae has changed is if you have your 2106 expenses and they're 25%. They're less than 25% of your actual amount of money that you make. We're no longer hitting you with that 2106 expenses. It's huge, especially for people that are writing those write-offs out.
Tell me about what the change in tip income is.
Well, before with tip income, you have this where they give you a W-2, and part of that is what they made you report. Your wages, your hourly, plus what you claimed in tips, which they make you claim a certain amount of tips. Well, some people make more tips than that, and what Fannie is allowing is if you make more tips and you say, listen, I don't make just this, I want to claim all of my tips because I want an X amount of house. I want to qualify for that house that I really want. The government will allow you to qualify, or will allow you to put that extra tip income on your tax returns, pay taxes on it, and allow you to count that income for qualifying if you have a 2-year history of doing that additional tip.
So additional grace period to declare tips.
You've been listening to Las Vegas Real Estate Now with hosts Harvey Blankfeld and Shelley Brown. Please tune in every Saturday at 11 a.m. right here on News Talk 720 KDWN.